We need to restrict the growth in temperatures to 1.5 degrees by the end of the century. Is there a problem with the Northern Irish Protocol? Yes, there is, but we'll fix that. You can take it that Rishi Sunak is, and as indeed am I, is a staunch low-tax conservative. China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Here's what's coming up on today's program. Here are your top stories. Seeking a solution, Boris Johnson vows to solve an impasse over Northern Ireland's post-Brexit status. We'll bring you our exclusive conversation with the UK Prime Minister. Apple ditches Intel chips in its biggest overhaul of the MacBook Pro in years. Next up on the tech timetable, Netflix earnings tonight. Plus, Ericsson earnings take a hit as supply chain issues persist. Don't miss our conversation with the company's CEO, Borje Ekholm, in about 30 minutes' time. Well, good morning to you. Let's go ahead and check on these markets because they are much more calm than they had been yesterday. Yesterday, it was all about these inflationary fears, higher yields really taking a toll on the market. But we start today with lower yields, not just in the 10-year, across the curve, across sovereign bonds in Europe. So we're looking at about a 1.5 basis point drop in terms of that yield. So now trading at 158. That means that we're not having as acute concern in some of these risk markets. In fact, risk markets struggling for direction so far this morning. You're looking at a more or less flat Europe stock 600 and a DAX weaker here. Some of those higher beta stocks weaker, where we're looking at a stock 600 nearly up 0.1%, faring better in the U.S. session, up about 0.2%. So here is your Europe map. This is WM Go on your terminal, or Maps Market Go. A lot of gray, again, means that we're basically unchanged, the dreaded unch of markets. Now, some of the only places that we're seeing sub-movement, you're looking at an IBEX that's up about 1/4 of a percent. But a lot of these weaker areas, like the FTSE MIB, that's slightly lower, has to do with the fact that banks are declining this morning when we have lower yields. It's not giving us that boost to a lot of the region's banks that we had seen over the past few days. So that's your view of the markets. Again, equity markets really searching for direction this morning. But let's turn to the UK story, where UK Prime Minister Boris Johnson says the City of London will prosper outside of the EU, noting job losses and disruptions to capital flow have been lower than feared since Brexit. And in an exclusive interview, he told Bloomberg editor-in-chief John Micklethwait that far fewer bankers have moved out of the financial hub than predicted.
I think the long-term reasons why the UK remains attractive, indeed the short and medium-term reasons, are all the fundamentals remain the same. So the time zone, the language, the rule of law, the deep pools of liquidity in the City of London, the attractions of having some of the best universities in the world, many of the best universities in the world. But this is also the moment. It is the moment because we've got a series of things coming together. The UK is deciding to make a big bet on green technology. So the government is going in, setting the regulatory framework to encourage the private sector to come in the way that they are. And I quoted some of the numbers for the investment that we're seeing. So we're making a big bet on wind power, on hydrogen, on electric vehicles, on gigafactories, on carbon capture and storage, all those things. And that's driving a lot of the investment. But you're also seeing a government that is creating the bedrock, as it were, for industry, for investment across the whole of the UK. And so we're investing in huge quantities of new infrastructure, which we've long needed in this country to address our productivity gap. And so we're putting about £640 billion into transport infrastructure of all kinds, into technology and into skills. And that's different and new, the approach that we're taking, the levelling up agenda.
You have the global captains of BlackRock, yes, Goldman Sachs, JP Morgan. They're all coming to this conference, and they would all say the same thing, that yes, They like the City of London, but they're also hedging their bets. They're putting some jobs in Paris and Amsterdam.
But
and behind all of it,
fewer than they said.
But behind all of it, they would say, look, we are an industry. Finance and insurance is an industry that brings in £160 billion a year to the British economy. Fishing brings in less than $1 billion. And you put most of your energy into, they would say, into nonsense, into arguing with the French about fishing rather than this big issue of finance.
No, on the contrary, in 2008, 2009, there was literally only one politician who spoke up repeatedly for the City of London, for bankers, and that was me. And I know that the City of London is crucial, not just for our country, but for the whole of Europe and for this hemisphere. And that's why, if not the world, and that's why I think that it's profoundly in the interests of our partners to ensure that we do have good relations. We do continue to see, proper flow of capital and services between London and all the other parts of Europe. And I'm sure that will continue. If you want to raise money around Europe, if you want to finance your merger or whatever it is, London is still the place to come and always will be.
Just to use that point, and that is exactly what the hard-headed captains of industry will say. They will say, look, you are stuck in these arguments with France about fishing, or these arguments about finance. No, but they are the people, as you well know, who are blocking the City of London's ability to be able to trade with the rest of Europe or to get a deal on that. I mean, is it time to sort of fix those squabbles?
I think there's I've got great relations with the French government, with Emmanuel Macron, and will continue to ensure that the UK and France have a very close.
Are you back in phone contact? Are you on signal with them?
It's only I wouldn't dream
of telling us
sharing the private conversation. But the UK and France have been, mass serré, whatever the phrase, for a long, long time. And if you look at what we do together around the world, we're very close partners, we're friends, and it's vital. And it is the deep will of our populations that should remain the case, and we will continue to do great things together. Is there a problem with the Northern Irish Protocol? Yes, there is, but we'll fix that, and I don't think that's going to be the end of the world.
UK Prime Minister Boris Johnson there speaking exclusively to Bloomberg editor-in-chief John Micklethwait. Let's get more into the conversation about the UK and the economic outlook. We're joined now by Aaron Captain, Global Head of Economic Research at UBS. Aaron, first off, thanks so much for joining us this morning. We have seen this repricing in the UK rates market. We're now looking at traders betting a 115 basis point hike by the end of 2022. Have markets gone too far in their expectations of the BOE?
So as a terminal rate, I still think that's pretty low, but it is compressed into a pretty short time frame. So, and we're about to release we're responding to Governor Bailey's comments, and we'll be releasing shortly our new forecast. So I don't want to front run that, but it's pretty obvious when someone says, I'm giving you a signal that's, they're about to go. So there's all this debate about, are they making a policy mistake? And so my view on it is that, no, not necessarily. I think if they deliver what the market is pricing, that actually does very little to the economy. The banking sector in this country doesn't actually lend to the corporate sector. It's less than 20% of the bank book. The households have been stress tested for mortgage rates in excess of 6%. When you take out a mortgage, there's huge, I think, buffers to sort of withstand some modest increase in BOE rates. And then the other thing I think is that the pass-through is going to be less than 100%, as we saw pre-pandemic. So the notion, so I think what's happening is this is a public relations game where the Bank of England has effectively lost control of the narrative a little bit because of the energy shocks and lorry driver shortages, and obviously market-based expectations are running away, and there's now a sense of loss of control that they need to react to. But economically, I think this is sort of it's not going to do a lot of damage, and whether they start now or start a few months from now, which was the assumption just a little while back, I think it's sort of neither here nor there.
Oh, Aaron, you can front run some of your research. I promise we won't tell anyone. We love to get market calls from you. So if this won't really affect the economy, if it can handle higher rates, is there any presence of us heading towards a handbrake U-turn, as Andy Haldane put it, that there is a potential for them to wait too long if the economy does indeed need higher rates in the UK?
Well, so look, the reason I'm skeptical of that type of argument is that we basically threw the kitchen sink at trying to create inflation for a decade pre-pandemic and didn't get very far. And so the ability to generate core inflation quickly is just quite minimal. So you get these big swings because of factors that you don't control and have nothing to do with monetary policy. And I think it's, if you need to respond quickly, you can always do so. And I think partly you're now seeing that. I mean, they've shifted their stance, I think, relatively quickly. So I'm just not that worried about it. I think the makeup of the inflation dynamics is still very benign. So we have a core inflation forecast at the end of next year for the UK that has all the gas price increases in there that is still sub 2%, right? The headline we think is going to be at 2, core sub 2. So I just don't see it. I mean, we'd have to see, I think, these market-based expectations translate into consumer and corporate expectations sort of drifting up, and then actually see the price pressure broaden out. But the feature of the way inflation is behaving across developed markets is that it's entirely concentrated in the tills of the distribution, the tills of the basket.
Right.
It's just not in the center of the basket. And until that starts to happen, I just don't think that, I mean, that's a till risk you always want to worry about, but it's not something you want driving your policy.
Yeah, well, certainly a lot of tail risk concerns out there about inflation. I do wonder about the broader Europe recovery story. I know in your research you note that the European labor market is ahead of that of the U.S. What does that tell us about where in the cycle we are in Europe?
Yeah, so it's really interesting because normally you would, when the labor market is improving as quickly as it's doing right now in Europe, you think you're early cycle because you can only improve, it's reabsorbing labor at a pace of about 1% of the labor force per month, and which is just phenomenal, right? So the U.S. is absorbing labor now at a pace of about, a third of a percentage point per month or so, give or take. And so that really only happens when you are just coming out of a recession. And actually, I think we're now at the tail end of that labor market recovery. And when we get to January, when all the furlough schemes on the continent expire, we're going to be within a percentage point or so of full employment. And so I'm very encouraged by that. So I think the fear last year was that all these people on furlough and Kurzarbeit and those type of schemes would end up in unemployment. And it's just not happening. And so I think on the labor market side, we're getting, I don't know if you want to call it late cycle, because we were basically there pre-pandemic. So late cycle means different things to different people. So I think the labor market is getting tight. And then the next phase is going to be whether that tightness leads to wage increases. And so that, I think, is now interesting because the ECB does not at all have the narrative that I'm giving you. They don't think things are tight at all. So they think they have much more slack than the U.S. does. And so they think they have lots of time. But I think what's interesting is with these energy price spikes, the labor market getting tighter, we're now going into union season where these wages could start to drift back up. And then it actually starts to have a bit of an impact on their forecast. Now, I think the only problem from a trading perspective, that's going to happen after the December meeting, and it doesn't necessarily happen in a window where they have any decisions to make.
Yeah, it never comes together that neatly, does it? Aaron, we definitely have much more to cover. You're going to stick around with us. That's Aaron Captain from UBS. Coming up on the program, we'll get more of our exclusive interview with UK Prime Minister Boris Johnson. We're also going to be talking to Borje Ekholm, CEO of Ericsson, after the company's third quarter earnings. This is Bloomberg.
Central banks are at a place where, for the first time in a very long time, they actually are facing constraints on these policies. It's the first time where they're saying, wait a minute, there are actually constraints on us trying to be as easy as possible, move money to people as much as possible.
The Fed needs to redefine what they think of as an acceptable employment level, or they're going to stay too loose too long.
Anytime the Fed kind of whispers that they're going to tighten, you see the wall of worry increase and, the markets trade off.
The central banks are now running the markets.
The question is whether
the economy in the West can function without the central bank being ever present? And I think the answer is we don't know.
They may make a policy mistake here by waiting too long.
Investment professionals there weighing in from the Milken Conference about the next move for central banks. Markets pricing the Fed policy rate has shifted sharply over the past few weeks. There are now 100 basis points of rate hikes priced in by the end of 2023. Aaron Captain from UBS is still with us. So, Aaron, we're seeing more pricing. We're seeing more pricing for 2022, at least 2 full Fed rate hikes by then. But your forecast for when the Fed moves is much further down the road. Why?
Because we have an inflation forecast at the end of next year that's about 80 basis points below the Fed. So I think that's so we're in team transitory. We think inflation, most of what we're seeing now is bottlenecks and base effects, and they basically in level terms, prices stop going up sort of around the turn of the year. And if we're right on that, then you really have a quite big fall in headline, even though underlying inflation is starting to build in things like housing. And so that just creates a very different profile for the Fed, if that were to be correct. So then you're approaching the target from below rather than from above, and you just have lots more time to sort of wait and see what happens. Now, I think it's going to be a bit of a race against the clock as to whether we're right or not. So what's going to happen, I think, the next couple of months is inflation is actually going to be resurgent. So we think that some of the bottlenecks that had seemed to subside in things like used cars are intensifying again. And so those prices are going to go back up. And so by the time you get to the December meeting, I think their forecasts in the SEP are actually going to go up, not down. And so it's becoming, from their own forecasting perspective, just a really difficult narrative not to start to consider liftoff. Now, we think by the time you get to roughly the end of Q1, go into Q2, sequentially, you're going to start to see a pretty dramatic slowdown in the pace of inflation generation, and then you can sort of start to change your view. But I think it's a bit of a race against the clock. So if they finish by mid-year on the taper program, and then they get to the September meeting, even on our forecast, headline core PCE is still going to be running above 2. Even though sequentially it's slowing, and then it's a close call whether or not they go. Now, if they don't, and they just sit tight, and we get some board changes, then I think suddenly there's a window where they don't need to do anything for quite a while.
Okay, so you're not then concerned about this picture of runaway inflation, but could you go far as to say that our concern is the opposite? Concern is that growth won't pick up to the level we need it to in the U.S.?
So the stagflation debate. I mean, it's a weird debate to me, because we're still in the phase for, I would say, another 3-4 quarters where we're just growing substantially in excess of potential. Now, Q3 is an anomaly because of the Delta variant, but we're still in the phase of absorbing lots of labor market slack. And so as long as you have that much slack, you're just not worried about growth. I mean, it's like any post-recession recovery, you grow very fast. I'd start to worry about it late next year when you start to run out of that slack. Then you're sort of trend or sub-trend. You've got a big fiscal cliff in the U.S., and then you're flying too low to the ground, and you can, when you then hit turbulence, suddenly I think you have some worries. But that's just not now. I mean, that's 12 months from now.
All right, Aaron, so fantastic to get your viewpoints this morning. Thanks for joining us. That's Aaron Captain, Global Head of Economic Research at UBS. Up next, we have more on earnings, more on these markets. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get over to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Danny. The FDA is reportedly planning to allow a mix and match approach to COVID booster vaccines. The agency could act as soon as this week. It is likely to not recommend one vaccine over another, but may say it's preferable to use the same vaccine when possible. Moderna's CEO told us the company expects an FDA decision soon.
We expect this week potentially the authorization of a booster. There is a CDC meeting which is scheduled this week to make a recommendation, and so I'm hopeful that by the end of the week everything is wrapped up, and by next week Americans who got the Moderna vaccine can get the Moderna booster.
Now, the EU may trigger a new tool to freeze funding to member states failing to adhere to democratic standards. The so-called conditionality mechanism could be applied against Hungary and Poland, which are accused of rule of law violations. Hungary would forfeit 7.2 billion euros and Poland 36 billion. The EU Justice Commissioner says a legal order could be deployed within days.
For the moment, we try to build the most possible robust file to react. We need also to pay attention to a link between such a kind of funding of policies and the rule of law, democracy and fundamental rights. And if we are not doing that at home, like we try to do now with Poland, it's become to be difficult to be credible when we are speaking out of Europe about the same principles.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thank you very much. Leanne Gerrans there. Now, coming up, we talk earnings. It's Ericsson's third quarter earnings that were impacted by supply chains. That's next. Seeking a solution, Boris Johnson vows to solve an impasse over Northern Ireland's post-Brexit status. We'll bring our exclusive conversation with the UK Prime Minister. Apple ditches Intel chips in its biggest overhaul of the MacBook Pro in years. Next up on the tech timetable, Netflix earnings tonight. Plus, Ericsson earnings take a hit as supply chain issues persist. Don't miss our exclusive conversation, with the company's CEO, Borje Ekholm, up next. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. We're looking at equity markets now just off their highs for the session. The market opened up. It was barely changed, but we're now able to push higher on many of these indices. Both Europe Stock 600 and your E-mini futures trading higher by more than 0.2%. Really driving that, it all comes back to the yields picture. Softer yields this morning were down by about 2 basis points on your 10-year yield. That's allowing the dollar to also fall down by about 0.4%. And again, that fear of inflation, at least for today, not present, allowing some of these markets to rally. Now, let's get to the earnings story where Ericsson says that its third quarter sales were hit by supply chain issues that have been plaguing businesses around the world. The Stockholm-based telecom network equipment manufacturer reported net sales of 56.3 billion Swedish krona for the quarter. The company's CEO, Borje Ekholm, joins me now. Borje, first off, thank you so much for joining us this morning on Bloomberg Surveillance Early Edition. So I want to start with some of the highlights here. You were able to beat on your third quarter net margin in a quarter that we had so many industry plagued by supply chain issues, higher prices. How was Ericsson able to avoid some margin compression?
Thanks, Danny. It's great to be with you, and thanks for having me. Now, if we look at the third quarter, of course, we were hit by loss of sales in China, and that has been to the tune of about 3.6 billion, or 6% of our sales. So that we have largely compensated with growth in other markets. So what we have been able to do, we've put in place a strategy some years back where we focused on investing in R&D, which actually has been the key contributor to our strengthening of gross margin. And it's actually the key contributor of keeping a good gross margin during this quarter as well, because we use R&D in order to actually take costs out and develop a more competitive portfolio. We see that in networks, we see it in digital services as well. So that's why we're holding up and actually improving gross margin compared to last year. I would also say we see some effect from retroactive IPR agreements, which actually helped a bit in the quarter as well. And finally, we see Cradlepoint, the acquisition we did last year for enterprise applications that actually drives gross margin as well.
So you talk about this investment that's helped you maintain some of that gross margin, but of course, still in the quarter, you were hit by more supply chain issues than you and many people had been expecting. Does that mean that your investments within your own supply chain, within your own capabilities, need to be ramped up even more than they had been previously?
I would say we actually managed to have little to no interruptions actually in our supply chain up until late in the quarter, where we experienced some shortages of some individual components. That had some impact on sales, and basically, if we wouldn't have had those disturbances, we would have had a normal seasonality actually for the quarter. What we see is that we see the same type of supply disturbances posing some threats to the fourth quarter, but I would still not exaggerate them and put them at the front and center. But I think it is fair to say that we see some disturbances. It comes in the semiconductor supply chain, but it also comes in other type of components, and we're working very hard to build extra inventory, buffer stocks, etc., to manage the supply situation during the fourth quarter and into next year. So we're quite comfortable about that, but it could be some threats.
You also mentioned issues surrounding China, some loss of business there. Borje, do you see any of those geopolitical tensions easing and allowing Ericsson to make more headway yet again in the region?
I think, we often like to think of the world as falling into two buckets, one that we can impact and one we can't impact. Geopolitics, I feel we cannot impact. It's managed by other agendas around the world. So we have been focusing really on how can we gain footprint in other markets. And you have seen us in the third quarter, for example, sign an agreement with Malaysia to build a 5G network. We have signed an agreement with AT&T that's one of the largest in our history. So you see us instead focusing on winning business where we can win business, and that's what we try to do across our portfolio. Then, of course, it's a bit of a headwind in China, that's for sure. But we are also committed to China. We're going to try to regain footprint there. That's an effort that's going to take some time, but if you're there, you can at least strengthening the position. So let's see what we can do.
Right. Amid all of this, one of your activist investors and top shareholders, indeed, Cevian Capital, has said that there's ample room for Ericsson to give a payout to shareholders. Is this something you're considering?
We typically have a discussion in the board about the distribution policy, which will be public and when we report the Q4 result. Then we can also discuss how capital surplus should be treated. But I would also say, and we have proven through the Cradlepoint acquisition, that we actually can make inorganic moves that strengthen the company and creates value for the company and therefore the shareholders. So it becomes a trade-off of capital allocation in the future.
So quickly here, we have less than 45 seconds. Are you then considering more M&A to come after, as you say, this successful acquisition?
I think it's important for Ericsson strategically to strengthen our presence in the enterprise market. And to do that, we will most likely have to include inorganic growth as well. We're, of course, investing organically. And you see that in our dedicated networks, our IoT, as well as building out Cradlepoint. But I think we have opportunities to strengthen ourselves through M&A here as well.
Fantastic. Thanks so much for joining us this morning. Really appreciate it. That's Ericsson CEO Borje Ekholm. Now, coming up 2 weeks from COP26, Boris Johnson calls on nations to harden their commitments to cut emissions. What role will science and innovation play in the process? We're going to be speaking to Dr. Nikki Morley from Kantar next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, Boris Johnson says he doesn't want to turn away Chinese investment, despite the concerns of some of his own lawmakers. The UK Prime Minister spoke exclusively to Bloomberg editor-in-chief John Micklethwait in a wide-ranging interview. They also discussed what actions the UK is seeking on climate change ahead of the COP26 summit.
When I was running London, I went out several times to China and had fantastic trips
The
there.
things have changed, haven't they?
Well, there's no investment in stuff that drives jobs and growth in this country, whether it's in development. Look at what's happening in Greenwich, Vauxhall Nine Elms. Things that have taken off there because of Chinese investment. So I'm not going to tell you, John, that the UK government is going to pitchfork away every overture from China. Of course not. China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. Do
you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical. But I certainly think that having our trading relationship with China, if you look at it, it's in spite of all the difficulties, in spite of all the sort of angry conversations about or the difficult conversations about the Dalai Lama or Hong Kong or the Uyghurs, and where we will continue to stick to our points, right? We will continue to stick to our views. But actually, trade with China has continued to expand for a very long time, and I think probably will continue to expand, as I say, for the rest of our lives. That doesn't mean that we should be, we should be cautious about how we handle our CNI and about how we handle FDI from China into some of our sensitive industries. And that's why we brought in some of the legislation that we have.
We were talking about China.
Yes.
Obviously a huge deal in COP. And Xi Jinping looks unlikely to come at the moment. What do you think is a realistic goal? What's your personal goal in terms of COP?
Look, I think COP was always going to be extremely tough. We're hoping that we'll get a good turnout in spite of the pandemic. What we want people to focus on is their nationally determined contributions in reducing their CO2, making those hard pledges. Plus, we want commitments on coal, cars, cash, and trees. So we want the world to move away from coal by 2040, 2030 for the developed nations. We want to make sure that everybody stops using hydrocarbon-fueled internal combustion engine cars, and the UK is in the lead there. We said that we would stop that by 2030. We want a big package for the developing world to help countries that haven't been historic emitters to cut their carbon. So we need that $100 billion a year. We need that $100 billion. And the last thing is we want to make sure that we plant millions and millions of trees to help to fix the carbon and to restore the balance of nature. So those are the we need the nationally determined contribution. We need to keep 1.5 alive. We need to restrict the growth in temperatures to 1.5 degrees by the end of the century. We think that with the commitments that we're seeing, we could do it, but we're going to need to see some real action from the participants in Glasgow.
UK Prime Minister Boris Johnson there speaking to Bloomberg editor-in-chief John Micklethwait. And the Prime Minister said that global climate talks are extremely tough, and we're just 2 weeks out from the crucial COP26 climate conference. But what steps will businesses and nations have to take to reach those climate goals, and what role do consumers have in this? Joining us now to discuss is Nikki Morley, Cantor's head of behavioral science. Nikki, thanks so much for joining us this morning. So great to have you in the studio. So you and your colleagues ran this very fascinating study of consumers where you found that there are about 36% of Europeans who are willing to invest in brands that do good. So they're willing, but how able are they to do that?
That's a really fascinating question. You're absolutely right. In fact, 75% said they really desire to be more sustainable. The challenge is life gets in the way. You know, they're saying that when they're rushing, they're shopping, they're not thinking about it. 67% of people say, I don't even think about sustainability. What's really fascinating, though, is to help them. The onus is really on brands to really try to help consumers to be more sustainable, because obviously the desire is there. We see 42% of people moving away from brands they don't think are doing good for the environment.
Right. And consumers expect the brands to do that for them.
Absolutely. And in the work we did, we found, and this was a really surprising fact, 61% of people think it's on the brands to do something. Consumers are not going to be doing the heavy lifting, but they have a real desire to be sustainable.
Are the brands doing this, though? Is there a mismatch between what consumers say are lacking and what brands are actually doing?
Lots of brands are moving in the right direction, absolutely, but there is so much more they can do. They really need to understand how to help consumers to change behaviour, how to help them to identify what's the most sustainable choice. There are lots of consumers out there, we call them the eco-actives, really, really engaged in sustainability, will go out of their way to spend time and money on products and to be sustainable. But even they're struggling to find the right products and to really find products that actually are efficacious, that actually work,
Right. Well, and you mentioned time and money, and I feel like there is a factor of, especially the latter in this conversation, that we sometimes miss. I mean, is it fair to characterize this as an expensive activist problem to take on, that you need a certain amount of money in order to spend on companies who do good?
It shouldn't be, but today often it is. Lots of consumers, I think it was 70% in the study said, it's just expensive to be sustainable. And you know what? Sustainability should be business as usual for brands. They really have to act if they want to. So it shouldn't be about expense. And also it shouldn't be about subpar products. Really, you've got to put sustainability at the heart of your thinking, really. When you're innovating, when you're marketing, everything you do, it has to be at the heart of your thinking.
One of the other things I found fascinating in your study is that consumers are worried about greenwashing. What steps do consumers need to take in order to make sure the brands that they're buying are actually doing what they're saying when it comes to these issues?
Well, I think they really need to be knowledgeable. But actually, I think we turn the question around, because actually it's about brands. It's about brands and businesses thinking about, where do I have a right to play? Where do I have a right to be sustainable? Where do I need to make the biggest difference? Where am I making an impact? Then what's my purpose? How do I do this authentically? And that is the real thing to overcome greenwashing. It's not, you can't plaster the cracks. You have to work out what's your problem and what does your brand have a right to fight in. And that's where you need to go. And then and coupled with that, what do people really care about in your sector? If you get that right, then you take that move into saying, actually, how do I help people close that gap between their desire to be sustainable and their ability to do so? You have brought them with you and you're not greenwashing. And consumers should be able to recognise that because you've helped them to be sustainable.
Obviously, when we talk about sectors, very frequently we think about energy, we think, what is Shell doing, what is Exxon doing? But in your view on sectors, is there any in particular that has more scrutiny from consumers or just deserves more scrutiny in general that maybe has fallen by the wayside?
Interesting question. I think one of the sectors that I think is doing really well is FMCG. I think that's really trying hard with removal of packaging. I think fashion is interesting. I think there is a lot more to be done in fashion. But you see the rise of brands like Pangaea and Patagonia who are actually moving in the right direction. So I think in every sector, there is somebody leading the charge. I think one of the challenges is some brands are born good, if that makes sense. So some they're just naturally born with sustainability at the heart of them. The big challenge, I think, for any sector is when you've got to pivot. You've got a legacy brand, it's an old brand, you haven't really thought about sustainability. Those are the ones that have got the toughest job. And I think in every sector you see them lagging behind, and they can't afford to be lagging behind.
Right. Nikki, so great to have you on. This is a really fascinating conversation. Definitely looking forward to more of these studies and having you on again. That's Nikki Morley, Head of Behavioral Science at Kantar. Now, coming up, we're going to be talking about Apple and their MacBook revamp, the tech giant taking its most aggressive step yet to strip Intel chips from its computers. We have that story next and a look ahead to Netflix earnings due out today. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, Apple has unveiled their latest lineup of redesigned MacBooks, AirPods, and smart speakers in a move to drop Intel and unleash their own processor. A little Intel pun there. Apple revealed that the new MacBook Pros are powered by their new M1 Pro and M1 Max chips. Let's dig into this more. We're joined by Bloomberg's Alex Webb. Alex, it does seem like this is something that we had been expecting. This is a move that Apple had started to make. So why the very positive reaction? Why does this matter?
I think a lot of it is actually to do with the details of what Apple's released, and particular attention on the pricing. They've really managed to increase, judging by the numbers they put in, at the average sales price of almost all these devices they unveiled last night. And at the moment, that's kind of what we're seeing from Apple. A few incremental improvements, but by increasing things like battery life and the size of the screen and all these little things around the edges, they think they can convince consumers to spend $100 more here and there. If you just look at the AirPods, they're $129 for the entry level before. That they've now gone up to close to $170. So it's that sort of almost 50% price increase that then does carry on through to the bottom line.
Yeah, I mean, I always go back home to the U.S. and get my Apple products because they're always more expensive in here. So I definitely feel those price increases. Well, of course, Netflix, the other big tech story, they have their earnings out later today. Every time we have one of these big hits that everybody's talking about, and the most recent one is Squid Game, how much does that actually impact their earnings?
I mean, for something like Squid Game in and of itself, it is clearly going to be beneficial. It is part of a broader gamut. How many people are going to sign up to Netflix because of Squid Game? Well, we did see some estimates from, Lucas Shaw, our colleague, broke this story that they think Netflix estimates that Squid Game will be worth $900 million to it over its lifespan. Now, that is a kind of estimate of the lifetime value of the customers that are retained because of Squid Game and those who sign up because of Squid Game. But it is really just part of a broader lineup. People might sign up for that, but they're going to stick around for other shows. And basically what we're seeing in this quarter, or we've seen in this quarter, is that the pent-up production that wasn't able to happen because of COVID is now played out, and we're seeing a better, improved lineup of shows that wasn't the case in the first half of the year when it was all a bit stale.
How does their international strategy look at the moment? Because I know in past quarters we've talked about that Netflix wants to expand overseas, but now we have this mix of international programs that's popular really everywhere. What is Netflix's current strategy when it comes to that?
I mean, it has a far more complete international strategy than does, for example, Disney. And the thing that's really interesting about the way this stuff works is that historically, if you were, for argument's sake, to spend $100 million on a TV series, you would have to guarantee, let's say, 10 million viewers in the domestic market. Right now, because Netflix is in 220 markets, you maybe only need 500,000 viewers, but in 20 different markets. And then you get to the 10 million viewers. It's just a different calculation and allows them to spread the risk a lot more evenly when it comes to massive expenditures. That said, Squid Game itself was moderately cheap to produce. It was $24 million for the whole series. That's less than the Dave Chappelle special on its own. So, that's the other advantage of going to these other markets where production costs are a bit lower.
Right. Alex, thank you so much. Really great to get you on. That's Bloomberg's Alex Webb giving us all the latest on the tech stories. Now, as we close out the show, let's get a quick look at these markets. We're looking at an unchanged S&P Stock 600 market, giving up some of earlier gains, still looking at S&P 500 futures up 0.25%. Well, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards in London, Matt Miller in Berlin, and Kailey Leinz in New York walk you through all the market latest. This is Bloomberg.
We need to restrict the growth in temperatures to 1.5 degrees by the end of the century. Is there a problem with the Northern Irish Protocol? Yes, there is, but we'll fix that. You can take it that Rishi Sunak is, and as indeed am I, is a staunch low-tax conservative. China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, October the 19th. Our top stories today. From China to Brexit and climate, Boris Johnson outlines his top priorities in a wide-ranging, exclusive conversation with Bloomberg. Stocks steady. Equities recover some ground as investors take a little comfort from signs of a robust start to earnings season. But some caution remains. Ericsson and Danone sound the alarm on supply chain issues as Apple takes matters into its own hands. A very good morning from London, everybody. Good morning to you, Matt, and to Kailey. And Kailey, I see European equity markets really making very modest gains, but the session in Asia was more positive.
Yeah, absolutely a risk-on tone in Asia overnight, Anna. When you look at the GMM function or global macro movers on the Bloomberg terminal, there was a lot of green on the screen, including for most of the major equity benchmarks. Pretty much all Asian currencies, especially the Chinese yuan, both onshore and offshore, actually has a black box in it on GMM, which shows that it's a move of at least 3 standard deviations. You also had some pause in the selling in bonds in Asia overnight. Now, the equity move was led by Hong Kong. The Hang Seng up about 1.4%, and that was led by technology. The Hang Seng Tech Index up 3%, actually popping back above its 50-day moving average, helped out by the fact that yields are moving a bit lower today. We're taking a small break from that selling pressure. In Australia, actually, the 3-year yield down as much as 4 basis points, only ended the day about 2 basis points lower, but that was after some dovish minutes out of the RBA. In other asset classes, of course, we also have to keep an eye on Chinese credit. China having a dollar bond sale today, even despite we are still in the midst of the Evergrande crisis, though Reuters is reporting today that Evergrande did pay its yuan-denominated interest payment today, so that may be a bit more of an optimistic sign. And then I was talking about the outsized move in the Chinese yuan. It is at its strongest against the dollar since all the way back in June, stronger by about 0.6% today to 6.3887. Now, here in the U.S., the S&P 500 is coming off of a 4-day winning streak, actually the longest winning streak for the index since back in August. We'll see if we can make it 5 days today. At the moment, S&P 500 futures are in positive territory, up about 0.3%. You are seeing some easing in the bond market selling pressure here stateside as well. We're down about 2 basis points on the U.S. 10-year yield, back below 160 at 158.27. Crude gains continuing today. WTI above $83 a barrel at its highest since 2014. And of course, it is the day we've been all waiting for, Matt. The ProShares Bitcoin Futures ETF will begin trading today in anticipation of that. Bitcoin is higher this morning by above $62,000.
You know, on the one hand, I feel like I've been waiting for it for a decade. On the other hand, it's just a futures ETF, right? I don't get why we can't have a Bitcoin ETF that's just backed by Bitcoin. Well, I do get why, but it's a longer conversation. In terms of what's going on here in Europe, we don't have a lot of movement on the equity indexes. Right now, you can see a lot of gray on the screen, which means not a lot of movement to the upside or downside, with the exception of the Iberian Peninsula. You can see some gains there. The interesting thing, I think, is what we're hearing in earnings, Anna. So we heard from Danone that the supply chain issues are a problem. From Ericsson, on the other hand, that problem shouldn't be exaggerated.
Yeah, absolutely. That problem shouldn't be exaggerated, but we add to the list, don't we, Matt, of the number of companies that have spoken to us about this as being an issue. Philips yesterday, Ericsson, we'll get to that conversation shortly. Now let's take a look at what is on our brief for the day ahead. Asset manager ProShares, as you just mentioned, Kailey, plans to launch the first Bitcoin-linked ETF on the New York Stock Exchange. It is a future-backed one, as Matt was just pointing out. Around 8 a.m., New York time, Bank of England Governor Andrew Bailey speaks on climate change. That is at the joint Bank of England and Bank of Italia research conference. He's talking climate change. They've said a lot, of course, to reset market expectations around rates, around interest rates recently, so we'll see how that conversation develops. Netflix reports its third quarter results at 4 p.m. New York time. It's expected to show solid subscriber growth and include an upbeat outlook. And I'm only laughing, Kailey, because I was expecting Squid Games to feature there somewhere. The journalist in me says I should have watched this thing. The contrarian says I might not. Have you?
I have not, Anna. I have not yet given into the peer pressure, but the question is how many people have and how many more people signed up for Netflix in the last month since Squid Game came out just because they want to get in on the hype and be part of that kind of cultural moment.
Yeah, but for some reason I feel I don't even need to ask Matt whether he's watched it. You have, right?
No, of course. I've watched it. And the thing is, it starts out so good that you're excited and you feel a little bit sophisticated also because it's a foreign series, but I thought it turned out poorly, and I wouldn't recommend it to anyone.
Okay. Yeah, I always need my glasses to read the subtitles. Anyway, back to the morning brief. And what else is ahead for us? The UK government is hosting the Global Investment Summit today. Bloomberg is speaking exclusively to the Goldman Sachs CEO David Solomon at 6:45 a.m. New York time. There's lots coming out of this around climate change. We've heard from Jess Staley on this subject. We'll hear from Boris Johnson on this very subject in just a moment. Now, Matt, you mentioned supply chain. Supply chain issues are weighing on global businesses. Telecom network equipment manufacturer Ericsson and the world's largest yogurt maker Danone warned they will continue to pose a risk. Let's get more on this. Bloomberg's Tom McKenzie is with us. Tom, very good morning to you. So we're just adding more and more names to the list of companies that are warning supply chains are taking a chunk out of their business.
Yeah, absolutely. So we heard this from Dan on talking about the input prices in terms of milk, packaging as well. Of course, they rely on that to get their products to our shelves and to hold them there for us, but also the transport and logistics snarls that we've seen. We saw cost inflation. This is their forecast. It increased in the first half by 7% cost inflation. They see it increasing again by 9% in the second half. And what they've also said is they're going to have to pass on some of this cost now to consumers, as well as cutting costs across the rest of the business. So they're looking at those cost savings, but they are going to have to pass it on to the consumer. So that's a clear warning. And they say that we should also prepare and continue to prepare for additional supply chain disruptions going forward. Ericsson, now, sales were hit because of the increase or in difficulty in sourcing individual components. Overall, their profits beat the estimates, but it was the sales numbers that came in below some of those estimates. Margins were higher, but they are also pointing to the fact that we're having to invest in our supply chains because of these concerns. And crucially, they said that the supply chain risks will continue for Ericsson, of course, a maker of telecom equipment, into the fourth quarter.
You know, I was looking at the Apple supply chain page on the Bloomberg, Tom, and I think it's really interesting. It tells a great story about what's going on. If you sort by projected sales growth, you can see huge expected gains for all of the suppliers, right? Because there's so much demand out there. But if you look on the right side, the customers, there's a lot of red because they just can't get the stuff that they need.
Yeah, the shipping issue is prominent, of course, for China, that has built out this incredibly, for Apple, that has built out this incredibly sophisticated supply chain within China. What we heard yesterday, we had this launch of new products where they upgraded the MacBook Pro, but they also unveiled this new chip. We knew it was coming. They put some of their new chips, the M1, for example, into some of their lower end products, but now they're really moving up to the top tier and the most expensive products in their range with their own processors. So part of this, of course, is about Apple becoming less reliant on the likes of Intel and building out its own semiconductors. So you had, for example, the M1 Max and the M1 Pro, 70% faster. Now, I talk about the relaunch. They changed up the MacBook Pro. That's the first time in a number of years. The question is, are you actually going to be able to get hold of one of these, Matt? Because we know that the new iPhones, iPads, customers have been told they probably won't get those until November or December. So question marks about how the supply chain is going to impact the delivery of these newly revamped MacBook Pros.
That's right. I ordered an iPhone in September, and now they're telling me I won't be able to get it until November, but they keep pushing that date back. Even the cleaning cloths for the iPhones have been delayed. So chips and ships, a real problem. T-Mac, thanks very much for joining us. Tom McKenzie covering our tech stories for us out of London. I want to get over now to Washington, D.C., where Democratic Senator Joe Manchin is casting doubt over reaching a deal on President Biden's economic agenda by the deadline at the end of the month. Joe Matthew joins us with the details. And Joe, Manchin has been a real thorn in President Biden's side.
That's true. That part hasn't changed. Not a lot of this story has actually changed here as we consider the senator from West Virginia saying out loud really what everyone in Washington already seems to know. This self-imposed October 31st deadline to get infrastructure and reconciliation done, not likely, not terribly realistic. As I remind everyone, Matt, there's not even a bill yet. They haven't even agreed on the components of the bill, never mind write legislation, and that takes time. Even if they did get this together, say, by the end of the week, which no one is predicting, there'd still have to be CBO scoring. Lawmakers would need time to read the bill. Then we'd set up a series of procedural and actual votes. Getting that done in time for Halloween, not so likely right now. Although I will tell you that President Biden has scheduled two important meetings today, one with moderate members of the House, the other with progressive members, as they try to get some kind of a fire lit here and create some urgency under this matter.
Well, Joe, Halloween doesn't just mark this self-imposed deadline. It also marks the start of COP26, and especially after Senator Joe Manchin threw some cold water on the climate program within this package. Is there any likelihood that something on climate gets done ahead of Glasgow?
It's a great question, and this is the latest sticking point here, and not a huge shock that Joe Manchin is not a fan of this clean power program that would effectively green up the power grid. It would incentivize utilities to use green sources and penalize those who do not. Joe Manchin's from the coal state of West Virginia, so that's not going to fly. There is a question, though, about maybe there's an opportunity for a deal here. If, in fact, they can rewrite that provision to allow coal plants in West Virginia to receive incentives if they use carbon capture technology. That's not on paper yet, but it is something that's being talked about, and it gives us a sense of the conversations happening behind the scenes, to your point. So Joe Biden can go to COP26 and show something for the weeks and actually months of negotiations that have been taking place here.
Joe, thanks very much. Bloomberg's Joe Matthew with the latest on the domestic politics and how it is set to influence COP26. You can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Speaking of climate talks, in an exclusive interview with Bloomberg, UK Prime Minister Boris Johnson made a last-ditch call to world leaders for concrete steps to protect the planet.
We need the nationally determined contribution. We need to keep 1.5 alive. We need to restrict the growth in temperatures to 1.5 degrees by the end of the century. We think that with the commitments that we're seeing, we could do it, but we're going to need to see some real action from the participants in Glasgow.
Keeping 1.5 alive, then, Kailey, remains the goal. Johnson is hoping to use the COP26 summit in Glasgow, Scotland, to showcase UK leadership on climate change as he carves out a new post-Brexit role for the country. But he acknowledged then, Kailey, that this is going to be a real challenge. This is going to be something difficult to do when you don't necessarily have top teams from all of the major emitters around the world. President Xi's presence is not guaranteed. Narendra Modi not guaranteed. Bolsonaro of Brazil not likely in attendance.
Yeah, it's a very difficult moment for these talks to be happening. When you think about China, for example, you mentioned Xi Jinping not attending. We are in the middle of a global power crunch in which China has told coal producers, forget about the annual quotas. You can just produce as much as possible. We need to have power. And that in some ways runs counter to the initiatives set forth at COP, pushing more towards clean energy. So I think it comes at a difficult political moment, and it's going to be very hard, Matt, to find any kind of consensus, especially with large emitters like China and with India as well.
Yeah, well, sure. And the climate and COP26 is going to be a huge focus for world leaders. The climate issue, we know, is a very popular one. I'm more focused, though, Anna, on the tax issue. I mean, he talked about he and Rishi Sunak maybe cutting taxes on corporations. Didn't they just raise taxes on workers?
Yeah, absolutely. We have seen some tax rises. We're going to get another look at the UK's finances just next week, in fact. Not expecting to see huge tax rises there. But he puts it all in the context of the pandemic. He said nobody foresaw it, nobody saw it coming, and it's something that the UK finances have had to reflect. So I suppose that is the context in which we view the UK tax story, Kailey.
Yeah, well, it was a great interview with Boris Johnson, and we will have much more from that exclusive conversation later on this hour. First, though, let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One bigger mover to the upside is Teladoc, which, of course, operates remote healthcare services. It is up about 2.5% after getting upgraded at Wells Fargo. The analyst talking about the long-term potential of telehealth, also putting a $156 price target on the stock. It's trading just south of $140 this morning. Another upside mover is Apache, but really it's the entire energy complex that is moving higher today with higher oil prices. Apache is up about 2.5%. One mover to the downside, though, is TaskUs, which is an outsourcing services company. It yesterday announced a secondary stock offering of 10 million shares. That's dilutive, and as a result, the stock is down about 6% before the bell, Anna.
Okay, a host of movers there. Yeah, just noticing that Brent prices above $85 a barrel now as we continue to move upwards on those commodities. Coming up, a record run. We'll get a check on another commodity story, on copper, as base metals are headed for fresh highs. And from inflation jitters to supply chain disruptions, we'll dig into today's market action with strategist Peter Chatwell. He joins us from Mizuho International. What does he make of UK rate expectations? Plus, mix and match. We've got details on the FDA's new approach for COVID booster shots. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards in London and Kailey Leinz in New York. Now, Anna alerted us early this morning to a really interesting chart on copper that popped up on the MLive blog. I could not believe it when I clicked on the chart. For our listeners on Bloomberg Radio, I will walk you through what we're looking at. It's the difference between the cash price of copper right now and the benchmark 3-month futures contract. It has absolutely soared to a spread of, or what's known as a backwardation, of more than $1,100 a ton. Now, just last week it was $60 a ton, and 2 weeks ago it was only $7 a ton. So this spread has absolutely blown out. Noor Ali, Bloomberg Markets Live editor, joins us now to walk us through what is going on here. Noor, what are we seeing happening in copper?
Good morning, Matt. Well, look, it's not called Dr. Copper for nothing, right? Because this is one aspect of this is that this is the manifestation of those inflation concerns finding itself in the energy market, but also realistically as well, you've got that demand crunch here. You've got the energy supply crisis that's going on, and you're seeing that manifest itself in copper in particular.
So that's manifesting itself in copper. I mean, is this sustainable then, Noor? I mean, what do we watch for to tell us whether this is sustainable? Because I saw this chart this morning and said to our colleague Mark Cudmore on the Markets Live blog, you know, is this the new gas price? Is this the new oil? You know, these are incredible dislocations in markets that we're seeing here.
Yeah, and a lot of market spectators are discussing that the spike in energy prices. I mean, the Bloomberg Commodity Index has risen, 33% so far this year. This is the biggest gain since the 1970s. I mean, we're talking about Jimmy Carter here. Like, we're talking about that era. And that's really important for us to keep in mind because we're also in a moment where we think it's a little bit, I don't want to say transitory. I'm a little bit too worried to say that. I'm going to say
you
it's
have
a little
to put
bit,
coins in the sweat when you use that word.
I'm going to say temporary because that spike, particularly in crude, is driven by that replacement because gas prices are soaring because inventories are historically low. Now, the things to keep in mind is you don't need gas in summers, but we are now pricing for those winter months. But I'm going to give you a little tidbit here. When you look at copper relative to gold, you'll see that it's actually quite expensive. And this is the very relatively well-known copper to gold ratio that my colleague Eddie Vanderwelt would love to know that I've mentioned on TV here. And that's something to keep in mind here when it comes to yields.
What does it mean when it comes to yields, Noor? What does that signal about the path of rates?
Well, look, if you put together the gold to copper ratio, and this is an excellent chart that you're going to look at now, and I'll try to explain it to our radio watchers, and you'll see here 2 lines here that show copper to gold ratio. You see that soaring, but it's also against the 10-year, and that's the U.S. 10-year yield. And what you'll see here is that those prices are particularly pretty much in line together. And if you run a very simple correlational study on both, just a really simple one, you'll see that it's quite strong and consistent. And so here, what this suggests that yields have more room to go higher on the, on the shorter end. I mean, for the longer term, this is a different discussion. But Gundlach, who this ratio is named against, does say that this is actually quite relevant when you come to measure on the short term here.
Noor, thank you very much. We appreciate the pro move in particular, explaining it to the radio audience. Thank you, Noor Al-Ali of Bloomberg Markets Live with us on set here in London. And for more market analysis, check out MLIV Go. Markets Live, that is on the terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London and Matt Miller in Berlin. Now let's get the first word news. And the UK will allow London Heathrow Airport to raise ticket surcharges by as much as 56%. Heathrow has been at odds with airlines for months after seeking to raise charges by as much as 95% to recover from the COVID-19 pandemic. Airlines have denounced higher fees as they try to bounce back from the downturn. The FDA is reportedly planning to allow a mix-and-match approach to COVID booster shots. The agency could act as soon as this week. It's likely to not recommend one vaccine over another, but may say it's preferable to use the same vaccine when possible. Moderna's CEO told us the company expects an FDA decision soon. And coming up, we'll get back to the markets with Peter Chatwell, head of multi-asset strategy at Mizuho International. We'll ask him about the sell-off in the bond market and if the worst is over for now. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. And Matt, I'm watching European equity markets a little bit stronger this morning. US futures also looking a little stronger. Despite companies citing all these supply chain concerns, it's as if that was all priced in, markets moving a little higher. And anyway, regardless.
Yeah, I thought it was really interesting to look at Ericsson. Obviously, the company is just a shadow of its former self, but it's still a big telephone equipment supplier. And the CEO says he wouldn't exaggerate the supply chain risks. He says they haven't lost any sales because of it. Now, maybe that's a little bit too optimistic. Obviously, the supply chain is a huge focus, especially for President Biden. And for earnings season, we're hearing about supply chain issues from pretty much every single company that reports, but maybe it should be taken with a small grain of salt. Finally,
okay, important words. Important words to tone down the supply chain talk then. Kailey, what are you seeing in markets this morning?
Well, as you said, Anna, it is positive, though it's a much more muted positive than we saw in Asia overnight, where the tone was risk on, and that was very obvious. In Europe, the stock 600 is up by less than 0.2%, though you are seeing some sectors within the index moving more materially higher. Basic resources leading the charge. It is up 1.4%. I'll have more on that in just a second. And here in the U.S., we are coming off of a 4-day winning streak for the S&P 500, and at the moment, we are in positive territory when it comes to futures, up about 0.25% on S&P E-minis. The bond market is chilling out just a touch. Today, we're down a little more than a basis point on the U.S. 10-year yield. We're just south of 1.59%. And then, of course, we've been talking copper all hour. It is up about 1% when it comes to futures this morning. But that, of course, is what's feeding into the basic resources strength in Europe. That, too, looks like it will be the case here in the U.S. come the opening bell in about 4 hours' time, because in pre-market trading, you have the likes of Freeport-McMoRan up about 2%, as well as the entire energy complex really getting a lift because oil prices are higher as well, higher at its highest since 2014. As a result, the likes of Apache is up 2.5%, and Occidental Petroleum up about 1.7%. Matt.
You know what I think is really interesting, Kailey? It's not all about, with copper, it's not all about the spot price or the 3-month price, but more about the spread. And I think the same is true with bond prices. Yesterday felt like a real sea change because we had 2-year yields jumping across geographies as the prices plummeted. But it wasn't really about the single price action, but the curve. Take a look at this chart. And for our listeners on radio, I will tell you it's the U.S. Treasury 5s 30s spread. It is the flattest that we've seen since April of 2020. So something is going on here. Even today, we see a lot of action in the curve flattening. Joining us to help us understand is Peter Chatwell, Mizuho head of multi-asset strategy. So Peter, why do we see, what is this flattening curve telling us, I should ask?
Well, yesterday was an important day to discuss because there was such extreme volatility in the front end of most interest rate curves that you actually had some technical factors at play causing that curve flattening. So there was basically some hedging technicalities which caused there to be a need for many market participants to buy the long end of the curve. Part of that was stopping out of positions, but part of it was because the interest rate regime had moved so much higher that there was a need to re-hedge some exposure. Yeah, so technical factors were at play, but there is a bigger macro theme.
Right, yes, and so let me ask you about that. Good morning to you, Peter. So yesterday, you think there were technical factors involved. Does that mean the bond sell-off that we were talking about so much yesterday, was that overdone? Is it over?
Look, in our view, it was overdone, but I can't say that it's yet finished, okay, because essentially what we've had is some of the rates markets have gone through something called a VAR shock. So there is a metric which many trading desks and hedge funds use, value at risk.
Yeah.
And it works on historical volatility. So when volatility rises a lot, it can mean that the market's risk-taking capacity becomes lower. When that happens, then you can have moves getting even more outsized.
And so what brought about the volatility that triggered that? Is it because of, you know, New Zealand inflation and pound or Bank of England expectations shifting a lot in quite a short space of time? Is it all these different geographies coming together to sort of build the pressure on inflation?
Yeah. It's those many factors. I mean, it shouldn't be a surprise that New Zealand inflation is running at 4.9% year over year. No one should really care that it came in there versus 4.2. But that's what happened, and the market sold off. And there is this limited ability to take down these sort of price moves. Then Governor Bailey of the Bank of England gave a speech on Sunday, which, as far as I saw, he was scheduled to give on Monday. Giving the speech outside of market hours meant that the market came in on Monday morning with something to immediately react to, and that caused that excessive volatility move.
Yes.
So a number of idiosyncratic factors have occurred.
Yeah, certainly got our attention. Kailey?
Yeah, well, Peter, Anna and Matt were talking at the top there about how you have all of these companies talking about supply chain issues, and yet it hasn't necessarily translated into a negative reaction in the equity market. The S&P 500 is only about 1% from its record high. Is all of the bad supply chain and margin news priced in?
Yeah, that's a really good point. So our view had been that companies are going to be able to find sufficient demand for their products because the consumer is in a really strong position. Household balance sheets are in great shape. Savings rates have been very high through the pandemic. And we think that what we should see from these earnings season is that the market was overdone in terms of its fear that companies wouldn't be able to maintain margins. Actually, the results that we had so far is that margins are still pretty resilient compared to where expectations were.
So what would you buy right now, Peter? I mean, say I have fresh powder to burn and I want to get into these markets, where would I go?
Well, it depends on your horizon, Matt. If you think that the interest rate sell-off is overdone, if you think we don't need rates to go lower, we just need rates to be stable. If there is going to be stability from here, then I would think that what we call the risk assets, so equities and high beta credit, I would think that they've got a lot of upside from here. Certainly that's our view. But I would caution that. I think that the rates market sell-off, because the market has become a bit idiosyncratic, can't quite price itself correctly, is at risk of going further. If it goes further, it will then start to hurt on the perceived valuation in equities, and that would start to then cause major volatility.
If the rate sell-off goes further, then bonds don't really act as a hedge. What does?
Yeah, very good. So what does act as a hedge? Well, clearly, inflation products in that environment still do have some upside. And so this is really challenging to suggest, because if you look at break-evens in the US, 10-year break-evens in the US, 10-year break-evens in a number of markets, they're quite high. What is not quite so high is the forward inflation rate. So if one can trade in the derivatives market, then the five-year forwards are still relatively low. And again, that's because the inflation that's expected is near-term. It's not expected to be as excessive over the more medium-term horizon. That's why there's value in the five-year forward inflation rate. But otherwise, yeah, you have to view, I do view equities and, to a lesser degree, high beta credit as having better inflation protection characteristics than the rates market does.
Okay.
So, yeah, the hedge is difficult to find.
The hedge is difficult to find. All roads seem to lead back to inflation. Peter, thank you very much. Thanks for talking to us this morning. Peter Chatwell, Head of Multi-Asset Strategy at Mizuho. Coming up on this programme, Boris Johnson's plan to get more money back into Britain. Part of our exclusive interview with the UK Prime Minister about investments in the UK. That's next. This is Bloomberg. This is Bloomberg Surveillance, the early edition. I'm Anna Edwards, live in London with Matt Miller in Berlin and Kailey Leinz in New York. Now, the UK Prime Minister Boris Johnson says the City of London will prosper outside of the EU, noting job losses and disruptions to capital flows have been lower than some had feared since Brexit. In an exclusive interview, he told Bloomberg editor-in-chief John Micklethwait that far fewer bankers have been moved out of the financial hub than predicted.
I think the long-term reasons why the UK remains attractive, indeed the short and medium-term reasons, are all the fundamentals remain the same. So the time zone, the language, the rule of law, the deep pools of liquidity in the City of London, the attractions of having some of the best universities in the world, many of the best universities in the world. But this is also the moment. It is the moment because we've got a series of things coming together. The UK is deciding to make a big bet on green technology. So the government is going in, setting the regulatory framework to encourage the private sector to come in the way that they are. And I quoted some of the numbers for the investment that we're seeing. So we're making a big bet on wind power, on hydrogen, on electric vehicles, on gigafactories, on carbon capture and storage, all those things. And that's driving a lot of the investment. But you're also seeing a government that is creating the bedrock, as it were, for industry, for investment across the whole of the UK. And so we're investing in huge quantities of new infrastructure, which we've long needed in this country to address our productivity gap. And so we're putting about £640 billion into transport infrastructure of all kinds, into technology and into skills. And that's different and new, the approach that we're taking, the levelling up agenda.
You have the global captains of BlackRock, yes, Goldman Sachs, JP Morgan. They're all coming to this conference, and they would all say the same thing, that yes, they like the City of London, but they're also hedging their bets. They're putting some jobs in Paris and Amsterdam.
But
and behind
far
all of
fewer
it,
than they said.
But behind all of it, they would say, look, we are an industry. Finance and insurance is an industry that brings in £160 billion a year to the British economy. Fishing brings in less than $1 billion. And that you put most of your energy into, they would say, into
nonsense,
arguing with the French about fishing rather than this big issue of finance.
No, on the contrary, in 2008, 2009, there was literally only one politician who spoke up repeatedly for the City of London, for bankers, and that was me. And I know that the City of London is crucial, not just for our country, but for the whole of Europe and for this hemisphere. And that's why, if not the world, and that's why I think that it's profoundly in the interests of our partners to ensure that we do have good relations. We do continue to see, proper flow of capital and services between London and all the other parts of Europe. And I'm sure that will continue. If you want to raise money around Europe, if you want to finance your merger or whatever it is, London is still the place to come and always will be.
Just to use that point, and that is exactly what the hard-headed captains of industry will say. They will say, look, you are stuck in these arguments with France about fishing, these arguments about finance. No, but they are the people, as you well know, who are blocking the City of London's ability to be able to trade with the rest of Europe or to get a deal on that. Is it time to sort of fix those squabbles?
I think there's I've got great relations with the French government, with Emmanuel Macron, and will continue to ensure that the UK and France have a very close.
You back in phone contact? Are you on signal with them?
It's only I wouldn't dream
of telling us,
sharing the private conversation. But the UK and France have been, main serré, or whatever the phrase, for a long, long time. And if you look at what we do together around the world, we're very close partners, we're friends, and it's vital. And it is the deep will of our populations that should remain the case, and we will continue to do great things together. Is there a problem with the Northern Irish Protocol? Yes, there is, but we'll fix that, and I don't think that's going to be the end of the world.
The UK Prime Minister there, Boris Johnson, speaking exclusively to Bloomberg editor-in-chief John Micklethwait, who joins us on set here in London now. John, very good morning to you. So Boris Johnson wants to set out the investment case for the UK, doesn't he, to these titans of finance that he's been talking to today. I mean, can he say enough to placate or to get them away from their concerns post-Brexit?
I think when I look at this, I just look at myself being a poor man's Anna Edwards, let alone a poor man's Matt Miller, which is an interesting concept. But my main thing, no, I think he's stuck in this thing where if you look at the numbers, which he's sort of slightly denied, but the numbers are pretty clear. Britain has not been that good at attracting investment over the past couple of years relative to the size of its economy. And I think there are, people, outsiders come and look at Britain. They see the queues at the ports. They see these problems with truckers. They see a possible energy crisis. And they see also taxes have gone up. And so I think he does face a tougher battle. And notwithstanding what he said then, I do think that the financiers, the sort of people who listen to us, they are suspicious of him because he has spent more time arguing for fishermen than he has for financiers.
Well, I don't know about the poor man's Anna Edwards, but you had to be there to understand the Latin, John,
yes,
because there was some of that. The French I'd have been okay on, but the Latin not so much. There was a bit of Latin. But in terms of the things that we could really easily understand and the investment climate, I mean, you tried to ask him. We often try to ask the British government about financial services and the role of the city post-Brexit, and they often want to come back to talking about fintech. We talk equivalents, they talk fintech, and that's the way these conversations go.
And he brought that up again. And he is right. I mean, he's right that if you look at fintech, actually London is doing quite well. And he's absolutely right that the city still has lots of strengths, but he's got all these people across. We've got David Solomon on later. You've got Jamie Dimon was across here. Larry Fink of BlackRock. All these people, the hard fact is they are slightly hedging their bets at the moment. And so I think Boris has got a chance to try and rectify that. It's interesting, that interview. That interview was in Margaret Thatcher's study, which I only realised at the last moment. And on the shelves, there are things like Hayek's Road to Serfdom. And originally, at least, that was the kind of bit of conservatism Boris Johnson came from. He came from the old kind of classical liberal almost version of it, where you believed in free markets. And he made his name in our dismal trade, attacking, as a journalist, attacking the bureaucrats in Brussels. But now he's got quite a big government state, and he's got all these problems around it. So I think he has to convince people that he is interested in these things again.
So the ghost of the low tax was present in the room. Matt?
Well, I mean, is it fair to say that he's gone from libertarian to populist, John? Has he taken pages out of the Donald J. Trump playbook in order to gain and remain in power?
I think there's a bit of that. I mean, he doesn't so much take pages and think about it consciously. Boris, he just sort of drifts in a particular direction. But I do think, yes, I went to the Conservative Party conference, and that was a very different sort of setting than it used to be up in Manchester. The core of the Tory party now is quite a lot of people from the north. It's a different feeling thing, and there's no doubt. Margaret Thatcher would have shuddered at the idea that the tax take in Britain is now, I think, up to the same level as it was in 1969. I think it's around 30%. And by the time you take up all the things to do with increasing national insurance, increasing corporate taxes, by some measures, it could go up to what it was in the 1950s. So there is an element whereby he's got pulled into that, I think.
How much is the city, how much is finance sticking to London despite Boris Johnson's best efforts? I mean, at some point, he's going to be out of office, right? We in the U.S. were hoping that our partners around the world would hang on to our relationship despite the Trump years, and now they're past. Are you seeing the financial leaders of London doing the same?
I think there's a bit of that. I mean, the truth is, if you're in finance, there is a huge sort of, there are a lot of reasons, as he laid out, to stay in London. You've got the infrastructure, you've got the English language, albeit somewhat mangled on one side of the Atlantic. You've got a variety of different things. And you've got also this culture, which goes back a long time, of being entrepreneurial, being freewheeling. But, there is no doubt, unless they actually start sorting this, sorting the deal with the French, you can take it any particular way, that there is no real argument about the fact that what's all the way around here is a much more important thing to the British economy than fishing. And yet the British government has spent most of its energy in terms of arguing with, especially the French, and I'm sorry to pick on the French, but they are the people who are the main kind of obstacles in this. The city which he depicted, the one that the world will come to raise money, to get involved in, that is something which at the moment does not have the ability to trade as easily with the rest of, not the rest of the former EU, which Britain used to be a member of, that it had before. And that was always a cost of Brexit, but the British did nothing for services generally, which is very weird given the fact that it's about 70% of the economy. But the city in particular, bankers were not popular. And Boris Johnson's right to point out, 2008, he was the person who was making the case for the industry here. But now, or at least until this week, he has not been doing the same thing.
OK, we'll see how it all goes down with the assembled audience from financial services this week. David Solomons from Goldman Sachs speaking to us, of course, later. John, thank you very much for joining us here on Bloomberg Surveillance, the early edition. Bloomberg's editor-in-chief, John Micklethwait. Coming up throughout the day, then, stick with Bloomberg for our live coverage of not only that event that we've been talking about, we were talking to Prime Minister Johnson at, but the Milken Institute Global Conference. That is also taking place. We'll hear from Guggenheim CIO Scott Minerd and Oaktree Capital co-founder Howard Marks. The former has lots of interesting things to say about the way that central banks run these markets, in his view. We will bring you all those conversations later. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. Now look at what we are all watching, team. Kailey, I know what you're watching. You're watching Netflix, either the channel or the earnings story.
Even though she's not watching Netflix.
I am watching Netflix. I'm just not watching Squid Game, Matt. But Squid Game could actually make a difference to Netflix in this report due after the bell in terms of subscribers, given it is so popular and there may be some peer pressure going on that I know Matt Miller has succumbed to. So the question will not only be how many subscriber additions came in the third quarter in the 2 weeks that Squid Game was out in the period, but also what does it mean for guidance in the last period of the year, Matt?
Yeah, I think it's really going to be really interesting. Our producer, Dan Curtis, has pointed out Squid Game only plays in 2 weeks of the reporting quarter, but it's going to be big in the outlook.
Important to remember. I find that real life is scary enough. Not sure I need Squid Game. Right, more Bloomberg Surveillance is ahead, including Goldman Sachs CEO and Chairman. This is Bloomberg.